got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the coattails.
Thank you for joining me today to the MrNotAdvice podcast. Before we get started, a quick disclaimer. Nothing in this podcast should be construed as investment advice or tax advice or any advice in any capacity. Always consult with your advisor, whoever that might be, before you make any decision, and never get your investment advice from complete strangers off the internet. With that, I want to disclose to my listeners that Mr. Reyes was kind enough to record a podcast with me yesterday, and I was very excited to get it up. And I had some technical difficulties. So in his kindness, he is back again this morning. Mr. Reyes, what have you been up to, sir?
Oh, man, it seems like 2 lifetimes since we did our last podcast. I've just been enjoying the Montana lifestyle. I filled my tags, been fishing, been riding, been shooting. Life is good. Looking forward to the holidays and all the bills that are going to be coming. It's all good on my end.
When you go out hunting, do you wear the top hat and have the foxes and the bugle, or how do you? I'm just imagining that look.
Yeah, no, I look like one of these backcountry dudes without the lumbersexual beard.
Oh, okay, all right, that's good. Well, we've had a lot of company news go on. If you don't mind, I'd like to start off with EOSE, and why don't you bring us up to date? What's been going on?
Yeah, would love to. I mean, I feel like we've had a year's worth of news from the company in the last week. But before we get into that, I wanted to just kind of bridge from the last earnings call to today. The big issue in the last earnings call was that they were pushing out their guidance due to issues associated with their container manufacturer. And then there was a ton of really positive news about the factory and customer interest and achieving the service milestone waiver. But it was mooted because of this issue. And there was a lot of consternation, like, hey, man, is this a harbinger of things to come? Are we going to have the container issue first? And then, is there an issue sitting behind that? So I did a lot of work on that and got pretty close to ground truth, I think. And someone explained it to me in a way that really resonated, which was that they didn't get access to capital from Service until, mid-year. But up until that point, there were a lot of people that, saw this as a company in the vicinity of insolvency that had one foot in the grave. Well, when you're trying to run a company, you don't have cash. You not only don't have negotiating leverage with your vendors, but some of them won't even buy materials in anticipation of you getting funded because there's just too much risk. And so this seems like it absolutely is a one-time event associated with their capital condition, which has all changed. I mean, what a difference 6 months make. And I think as I said when it happened, I believe that this was most likely a speed bump that we would not be revisiting. And I think that's the case.
What do you think about how close do you think they were? I know you and I talked privately that, when Cerberus deal was announced, I think you and I were like, holy cow, that's just incredible. And then we found out the details, but how close was EOSE, and what type of, is this a 180-degree turn for the company because of Cerberus, or, how do you view that?
Oh my God. I think this was a company that exiting the first quarter was a quarter or two away from complete and total insolvency. And I think what Service did was not only provide access to much needed capital, but I think in order for Service to get to that point, we're all benefiting from the extensive due diligence that they did. And when the deal was announced, Joe Mastrangelo, CEO of EOSE, had a slide on Cerebus and all the reasons why they made this investment. And it ranged from, Cerebus's desire to be involved in this clean energy space, in particular the battery segment of it. They talked about how they did extensive due diligence on the technology. You can have comfort in believing that they did extensive due diligence with the customer base, competition. So I think there's a lot to be implied by Cerebus showing up. And in fact, it may have been the critical linchpin to enabling the DOE loan to close and ultimately be funded.
I talked to my Discord members about Cerebus and what they bring to the table, and I know a couple of things that I've seen is beyond the founder and chairman of Cerebus being involved in the the first Trump administration. Let's talk about what's going on now, the positioning, American made, some of the commentary in one of their news releases about allies, and then what's going on with their board of directors. None of this, I mean, Greg, I look at this without trying not to get overly excited, but at the same time, I look at this as pieces are being moved into place. I don't know why, but these pieces are being moved into place. And with EOSE, everyone wants to find that unicorn company, but very few companies have the ingredients. And truly with EOSE, I look at their primary risk moving forward is operational risk. They don't have financing issues. They don't, they're not in the middle of building their first line. Their customers aren't testing product. What do you make of sort of the geopol or the political connections that EOSE has?
Yeah, that's a great question. So, but before I answer that, I'm going to provide a little bit of context, touching on one of the points that you just made, and that is that, and this is just for me. I'm not a trader. I'm trying to take a long-term investment view in terms of how I think about companies. But what are the hallmarks of a great company? A company that can be a gorilla in its space and have an optimized business model. Well, you need to have a huge TAM with no entrenched dominant competitor. Well, EOS has that. You need to have what I call physics changing technology. Now, obviously, you can't change the laws of physics, but what you can do is reorder things that exist to come up with a compelling product offering. EOS has done that with the Z3. It has a number of very unique attributes as compared to lithium ion alternatives, ranging from better performance at temperature, the ability to charge and discharge multiple cycles in a 24-hour period. It is arguably a technology that has a longer life cycle. Some people have said that lithium ion really only has a useful life of 5 to 6 years based on charge discharge cycle limitations with lithium ion, and EOS has talked about 20 to 30 years. So you've got this very, very exciting backdrop, and the issue as it relates to, or the opportunity as it relates to the political environment, which was the question, was that going into the election, there were people, and this thought had occurred to me, and I did think deeply about it, had concerns about, well, geez, if President Trump gets reelected, isn't this going to be the death knell for green tech? And does it put the Inflation Reduction Act, which at the end of the day really turned out to be massive investments in green technology versus reducing inflation? It was just a misnomer in terms of what they called it. And those are legitimate concerns. But what really is going to happen here? I think, and we've got multiple indications of this, that the Trump presidency, in fact, could be an accelerant beyond what would have been possible if Biden had been reelected. The Biden administration has had a 7.5% tariff on Chinese lithium-ion batteries that was scheduled to go to 25%, I believe, in 2026, if my memory serves me correctly. Well, out of the gate, I think we can assume that we're going to see at least that 25% tariff go into effect immediately, if not higher. And Mr. Feinberg, one of the founders of Service, was very active and involved as an advisor in President Trump's first administration, and it's rumored that he's being considered for a post in the Department of Defense. Well, you have to be taking mushrooms or a microdose of LSD to think, gosh, is it possible that President Trump might not be comfortable with Chinese batteries being attached to the U.S. power grid? Well, imagine if that were to happen. So I think, if anything, particularly based on the geographic location of solar and wind farm and clean energy generation being predominantly in red states, short of California, it presents a really unique opportunity that could be an unanticipated tailwind.
What do you think? I mean, I absolutely agree with you. And I think that my opinion is EOSE, that stock just is still being rated as if it's turning the corner, so to speak. But when Cerebras came in, it pivoted quickly. And I'm looking at the stock below, $5. I'd been making comments over the last couple of weeks, sort of tongue in cheek to EOSE, after the DOE. Couple more news announcements. It will create a squeeze. Well, they started to create a squeeze. They've had multiple news announcements, but I think when we get over $5, there's almost as if I feel as though, having seen stocks like this before, companies like this before, that we're in a transition period where the general investing public is not aware of EOSE. It's not on the radar. And I think that's another ingredient behind EOSE beyond the government, their operational experience. I don't think there's a large audience for that know about the stock. You?
Oh, I couldn't agree more. I mean, look, full disclosure, when the Service news hit, I just bought 1.5 million shares, and that was like sub $1, because it indicated and signaled so many things that we just talked about intuitively, and I've been adding significantly all along the way. But the point about $5 is really important in my mind. It's kind of one of these unspoken rules, like you don't date your best friend's ex-girlfriend, right? You just don't do that. It's just
Really?
there's no law against it, but you're just not.
I wasn't aware of that rule. Let me write this one down. There's a lot of these rules I got to learn from you. Hold on. Oh, go ahead. I'm sorry.
So so there's this $5 rule, and it's not a regulatory mandate, but it's kind of been a rule that there are a number of funds that won't touch a stock sub $5, and there are a number of funds that won't let them do that because of risk management issues or being viewed as a penny stock. Well, I think once we get a solid close above 5, I think it could serve as an accelerant, because number one, it opens up a whole new cohort of funds that will be able to purchase the stock that could not below 5. And then the other thing that it does is, this company's got 25%. I don't have my Bloomberg up, but approximately 25% short interest. Well, all those guys are underwater right now. And if we start to see, the stock trade significantly up above 5, it could, create an accelerant to that. So I think it's an interesting setup. And I want to also address one of the other things that you alluded to, which is that, this is still kind of undiscovered. Well, it's kind of like the, high school ugly duckling that, you go to your first class reunion and go, oh my God, I mean, she's a knockout, or wow, that dude, he was Mr. Pizza Face, who looks like he, should be on the cover of GQ. Well, this is a company that, up until a few months ago was left for dead. And, the expectation was that, it's tired, it's a SPAC, whatever. And I think that's all history. And I think that as people see the earnings potential and they see the revenue growth and it gets above 5, I think this could be one of the best stories of 2025.
And full disclosure for our listeners, Greg and I did that podcast a couple of days after Cerebras news was announced. I believe it was a Friday, and we waited for the podcast to be released. both of Greg and I did not go into positions until that Monday and Tuesday. And so if you look at where we did that podcast, it was pretty darn near in that low range. And I know at the firm I worked at for over 21 years. Yeah, there wasn't that $5 regulation, but we would sort of put our nose up, right? Where we don't really look at that. It's too low priced. Let me ask you this question as we start to move into our next stock. You have stated in the past you have a matrix that you use to when you look at a company and whether it's worthwhile even to continue to look at it for a possible trade or investment. Would you mind going over that again? Because I think that'd be really useful for the listeners as they look at companies. Keep the Reyes matrix in mind as a screen. Would you mind doing that?
No, I'd be happy to. So, again, this is a very personal thing for me because it changed my life. Back in the, I don't know, I think it was like 97, 98, the web browser just come out and Google what was just about to go public, and there were billionaires being minted, new billionaires every 90 days, and I had just sold my last company, which was in the two-way wireless messaging space, and yeah, I'd made some money, and I was sitting at the kitchen table on a Sunday reading the business section, and it said, there are 200 CEO jobs in Silicon Valley, and no qualified CEOs. And I thought, well, shit, I'm a qualified CEO, but really, what goes into creating generational wealth? And I had a number of my contemporaries that had gone to Yahoo or had gone to Google or had gone to Microsoft or Cisco, and they'd made a lot of money, hundreds of millions of dollars. And I looked at those guys and said, that guy's not nearly as smart as I think I am, or he doesn't work half as hard as I do. And then a light bulb went off in my head. These guys, whether it was conscious or unconscious, or just the serendipity of, getting a phone call from a recruiter or a buddy, ended up with companies that had the following set of attributes. And this is the set of attributes that I use to aggressively pursue the CEO position at Brocade Communications, which made me very wealthy. And the company was a startup that at one point had a $24 billion market cap. So here it is. The success filter is you need to have a massive and growing TAM. TAM stands for total available market. Why? Because if the TAM's only $1 billion, your company can't ever generate more than $1 billion if you get 100% market share, which is highly unusual and unlikely. So you need a big TAM. You need no entrenched dominant competitor. The greenfield opportunities are even better because not every deal is a knife fight. So big TAM, no entrenched dominant competitor. You need a physics changing technology. And again, what I mean by physics changing is you can't change the laws of physics, but you can reorder things that create incremental value in the form of revenue acceleration or cost savings for the customer. So physics changing technology, you need a glow in the dark technical and management team because, A players can recruit A players, C players can't recruit A players. They won't work for them. You need to have a constructive board, be well capitalized, and you need a business model with unit economics that can scale and scale rapidly. So I found Brocade, took me 27 interviews to get the job. 2 years later, the company went from, an IPO to a share price of like $600-700 if you don't account for splits. So that's what I use to look at companies, not people on Twitter who claim that they're super successful and they're like putting out little tidbits and talking in cryptic slogans, or people that are just looking at charts. This is what I'm using to try to find the next Brocade analog, and I think EOS fits that bill. And the thing that I'd like to spend a little bit of time on next, if it's okay, I'd like to talk about the tour de force of press releases this past week and the implications. And then I'd like to have a little discussion about valuation, because Twitter's been pretty active with a a fulsome debate on, is the company fully valued or is it inexpensive?
Yeah, let's do that. Let's do that.
Um,
So what are you thinking in terms of from valuation, but aren't valuation estimates difficult? And for those of you who are new to listening, what's great about my partnership with Mr. Reyes is he has that incredible background for boots on the ground, successful CEO, all the way up to exit strategy. So, and I come in and I am more of that chart guy, but I'm a short-term trader, whereas Mr. Reyes is a value, long-term looking, not value, but growth. And so I'm curious to look at, because we're in that stage where I think when I mentioned before, where we're turning, we're pivoting, right? And I don't think the market has seen it. I don't think the market grasps that yet. Uh, so yeah, any information would be helpful.
sure. So the way that I think about valuation, and I'm not going to say, oh, this is a $30 stock, because I'm an expert CEO. No. What I'm going to say is exactly how I'm thinking about it, which is there's a continuum of opinions, right? At one end of the continuum, there are people that are saying, hey, wait a minute, this has had a 300% run, at its current valuation, fully diluted, including the service warrants. It's got a valuation north of $1 billion. It's fully valued if you assume that one line is up running at 100% capacity and they're not running at 100% capacity. So that's a valid view. I'm not going to attack your existential right to have an opinion. I happen to disagree with it, but that's a valid opinion. At the other end of the continuum, you could say, well, geez, this is a company that from dead stop should be able to do a couple hundred million next year and maybe get close to $1 billion in 2026 and a few billion in 2027. And if you layer in the tax credits, you have 60% gross margins. And, when all the tariffs hit and the Chinese batteries are banned, you've got a stock north of $30. Well, there is somewhere in between that continuum, which says, if this company does $200 million next year, and they can do north of $500 million in 2026, and you look at the earnings potential, and you put a 6 to 7 multiple on it. This could be a $6 stock. And in fact, there are $6 to $7 stock. And in fact, that's what a number of the analysts have out there in their models today. Well, I could say, well, you know what? If this is a company that's going from 200 million to 500 million to $1 billion, a company that has 100% revenue growth with 60% gross margin should get more than a 6 to 7 multiple. So let's say it's 20. That gets you to a $12, $13 stock. Realistically, sometime in the late 2025 late 2025 timeframe. But again, and I always hate it when everybody talks about, everything goes through the filter of their prior job or their prior prior marriage. So I can't even say it. It was so painful to get divorced.
How much did that cost you?
A lot.
Yeah, right.
A lot.
I know the pain, brother.
My ex-wife was one of the wealthiest women in California. So just put that in perspective.
Hey, what's her number? I'm just kidding. Go ahead. Sorry.
She's a lovely woman and the mother of two of my kids. So,
Thank you, sir.
but if I go back to Brocade, we went from 7 million in revenue to 63 million in revenue to 350 million in revenue. Well, when we printed 350 million in revenue, the company had a $24 billion market cap. Did it deserve that? Could you even justify that? You could argue pretty hard that it didn't deserve a $24 billion market cap and that it was not justifiable. But the stock went from $20 to close to 800. So could that happen with EOS? Yeah, maybe. Am I planning on it? No. but there certainly is a precedent for it. It has happened before. And I think people are looking for companies that have high growth, earnings potential, unique technology, in a big marketplace. And EOS kind of fits the bill. And I just come down to at the end of the day, this company checks all of my boxes, and the only variable is one of execution. And I was just having a conversation with X Times before our call, and we were reminiscing about the fact that this company has not historically executed and delivered on their stated intent. And I really believe that much of that was because there was one important accelerant that was out of their control, and that was the timing of the closing of the DOE loan. And I can remember, and I'm going to bridge to this week's tour de force of press releases. I can remember after the conditional loan approval was announced a little over a year and a half ago. I talked to Joe Mastrangelo, and I was trying to encourage him to, hey man, this is a big deal. It's transformational. You've got an opportunity to reintroduce, EOS 2.0, and this has just resonated with me, and I've never forgotten it. He said, look, man, I understand, but after everything that we've been through over the last 3 years, I'm not going to announce anything until it has either been achieved or I've got virtually 100% confidence that I'm going to achieve it. And what have we seen in the last week? We've seen a tour de force of press releases that I want to wade into and talk about, at least, my reading of the subtext for each of them, right? So the first one was this 400 milliwatt order with a integrator called IEP for Camp Pendleton, the United States Marine Corps. So why do I think that there's some significant subtext to it? Well, first of all, this is the second project that they will have done with IEP, which implies that the first one went well, or they wouldn't have partnered with EOS. The second is that this is a greenfield, first of its kind deployment with the United States Marine Corps. If it goes well, it's safe to assume that we're going to see more of these kinds of announcements with other Marine Corps bases. It's also a potential proxy for other branches of the U.S. military and its allies. So is the order huge? No. Is it nice to get, a 400 megawatt order? Yeah, of course it is, but at the end of the day, I think it's a harbinger of bigger things to come. So the next day, very next day, on 12/19, there was an announcement about a partnership with FlexGen and a joint development agreement. And I've read this quote at least 10 times, and it has huge implications. And the quote from the press release says that the intent is to, quote, tap into and leverage their respective and robust pipeline of projects with a total addressable pipeline opportunity of over 250 gigawatt hours. Well, if you do the math on that, that's a pipeline of $12.5 billion just for these two companies. Now, as an ex-operator, how do I think about this announcement? Well, what it tells me is that because FlexGen has the ability to work with anybody, and they've chosen to work with EOS on their joint pipeline, it implies in my mind that this is most likely a marriage that was made by one or more customers, that they like the FlexGen provisioning and management and visualization and command and control that their software platform offers, and they like EOS's best-in-class zinc bromide technology for the reasons that I'd mentioned earlier in the call. So I think this has hugely massive implications. And then, after the market closed on the 19th, we get a press release about the DOE loan being funded to the tune of $68.3 million. So this is money that they immediately received to reimburse them for eligible costs with their first line. Now, the one thing that is exciting about this, and X-Times had tweeted it, this is a loan where they don't pay interest until 2028. So they basically get the money for free for the first 3 years. That has huge implications because it's lower cost of capital. It's 310 plus million. You add that to the 300 plus million of service. This is a company that is in a great position from a capital standpoint. So there's no capital raise overhang. And then on the 20th, the morning of the 20th, Friday, they announced that there was that they were going to be searching for a location for their second factory. So why are these important press releases? Well, if you look at them through the filter of a CEO that I believe to be very conservative and wants to make darn sure that he can deliver the goods, the implications are profound. And if you read the detail on the December 20th second factory press release, there are a couple quotes that jumped out at me. This is one quote, that they're doing this, they're searching for this second factory location to, quote, meet the rapidly growing demand. So Joe Mastrangelo in prior earnings calls said that he would only commit to a second line if he had high confidence that he could fill at least 50% of its capacity with product. So that's a little bit of a tell. The other quote that caught my attention is they're looking for this second factory because, quote, of increasing demand from data centers. And this is something that I've talked about a number of times in prior podcasts, that there's a massive data center battery backup TAM that is untapped. And it appears as though from this press release that EOS is going to be a beneficiary of it. And why is it more acute today than it was a couple of years ago? Well, the answer is AI. Right. AI, dedicated data centers running energy hogs in terms of GPU processing need about 10x the energy than a traditional cloud-based data center. And the implications are that as AI becomes critical to running a whole range of customer applications, you're going to need to be able to guarantee to your customers that you can guarantee 7x24 operation with no downtime. Well, EOS is part of that equation. And yeah, there's a lot of arm waving about, micronuclear. Well, that may come to pass, but I don't think it's going to come to fruition anytime soon. That's a 5 to 10 year out possibility that needs to prove itself. And then in Joe's quote, Joe Mastrangelo, the CEO, he said, quote, "We are seeing an unprecedented surge in demand," unquote. Think about that. Let that sink in. Unprecedented surge in demand. So I've picked up from a number of my sources, and this isn't just applied to EOS, that there's a whole wave of U.S. companies that are scrambling to find alternative sources of supply and supply chain resources that don't involve China, because they're looking at the political events, the political landscape, and they're trying to make sure that their business is being de-risked. So the combination of these press releases, I think, is so impactful. And, as I look out at EOS, yeah, there's a lot that could go wrong if they don't execute. Current course and speed, with the implication of these press releases having been vetted and only being supported by the CEO based on his degree of confidence, the service involvement, the DOE loan being funded, the orders, the partnerships, it's all there. And yeah, you can say, wow, this has had a big run, and this company is fully valued. They only did 15 million last year. Well, you know what? I can remember when Palantir was $8 9 months ago, and now it's 70. Am I saying it's going to happen? No. Am I saying it could happen? Well, it's certainly a greater than 0% probability. And I've got a very, very large position, and I'm viewing this as a name that I wanna own for the next couple of years. Because for me personally, it's the best company that I have seen that meets the same attributes and success filter that I came up with Brocade, that created generational wealth for me and a lot of other people.
Thank you very much. I would add, and I wrote all this down. And what I'm going to do, listeners, in the New Year's, I'm actually going to put this matrix up on the site. So we'll be able to start. I know I had asked Greg, and he's been kind enough and gracious enough that if you do have ideas, send them to podcast at MrNotAdvice, and I'll send them over to Greg, and we'll take a look at them. The one thing I did want to comment about EOSE that I'm also from the technical side, I'm really happy that this move up is happening now and not 30, 60 days ago, because 30, 60 days ago, well, 45 days ago, we had, the dash for trash in the market where, they were going to try to push the market. Usually at the end of bull runs, you'll get money flowing into the Russell, the small caps, because those haven't moved yet and they're at higher multiples. So you can squeeze more return out of them at the end of a bull cycle. EOSE right now is going up, and we just had one of the worst days in the market last Thursday, and EOSE was able to hold its really a good portion, 80% of its gain from the low. So I'm very excited that EOSE stock is showing considerable strength, and I think there are people like you out there, reasoned, obviously not as well informed or experienced, that are looking at this company saying, could this be, as good of an opportunity as I think it is? And I think with EOSE, there is going to be an expanding, what I like to call upside premium. When a company gets buzz behind it and excitement, you see that that expansion of its share price where it's not necessarily justified by current fundamentals or even near-term outlook. And I think that's where we're at with EOSE on the front end. Truly, Greg, I look at the company and I'm like, well, operationally, you have sufficient capital, as you said. You have a great management partner building out the team. You have a product that's at the crossroads of this AI, data storage, energy needs, green energy. But it's not in the, for lack of a better term, in the direct sunlight of being the gathering end of it. And you also have management that has come back from the dead, as far as I thought they were going out of business. And so I'm looking at the share price next year without anything, an outlier announcement. I comfortably am putting it. This is not a valuation. This is more of a trading. I could see this easily at $15 a year from now. And so I'm super excited about EOSE. I don't know if you want to finalize with some comments about it before we move on. I guess this episode is going to be the good, the bad, and the ugly. So we just looked at the good. And did you have any more comments about EOSE before we go into the bad?
I think I've touched the four corners of the box.
Awesome. Let's go into the bad. Well, I'll clarify what I think is bad. When I look at EOSE, I look at the near-term prospects, long-term prospects, strength of the management, messaging, okay, and also, what's the expectation of hitting future targets, as well as recent news flow. I look at ENVX, I'm like, well, it looks like you all did the inverse of what EOS has been doing over the last 60 days or 5 months. So want to get us up to speed of what's going on with ENVX? We've had a lot of news, right?
Yeah, I mean, I think the best way to describe my feeling about ENVX is it's unrequited love. And the definition of that is when someone doesn't love you as much as you love them. And I just feel like we've had every single quarter for the last 6 quarters. It's been, a great earnings call followed up by some unanticipated piece of news that causes the stock to sell off, whether it's shelf filings or it's secondaries or it's 10b5 filings by the CEO. And most recently, we had a secondary dropped on us when those of us who listened to the call, myself included, wouldn't have imagined that would have been the case based on what management said, and then most recently we got a headline that the CFO Farhan Arman has resigned. So if I look at Enovix, the most recent call, it was really good, and the stock was trading up after hours, and um, then we see a filing on YBS, which is their manufacturing partner, where they indicate that YBS will not be buying the first line as anticipated or as stated in prior filings and press releases, but rather Enovix is going to be putting up $70 million for the first line. And then we learned that there's a $100 million secondary. When on the call, when asked about it, the CFO said, something to the effect that they had more than enough cash through mid 2026. And then the very next day, we see this headline hit about the secondary, and then the stock sold off, and it got as high as, or got as low as, I think it was 7 and change. And then we had an announcement that the CFO resigned. So on the YBS thing, the thing that kind of caught my attention is I believed, and I didn't fabricate this, it was kind of intimated by management that YBS was some kind of a front for the Malaysian government. Well, the fact that YBS couldn't get funding for this first line is eyebrow raising. And then there's the issue of, I hate to use the term management integrity, but that would be the most harsh view, but certainly mangled communications on this secondary. Now, if I push away from the table, I think that it was a very prudent thing to do, because they've talked about scaling the business in the second half of 2025, and that you just look at the burn of around $35 million a quarter. You could see a scenario by mid 2025 that they're down to below $100 million in cash. Well, what if there was a delay? What if the OEM had issues with the qualification and it slipped by 30 days? Or let's say the qualification went great, but the OEM said it went so great, we're going to wait and put it in our next flagship phone that's not going to be shipping until 2026. They could have found themselves in a situation where they were flat-footed and in need of capital. So I think it makes total sense. What I don't think makes sense is the way that it went down and the way that it was communicated. And I think that the banker that they used did a horrific job of managing the placement. Obviously, word leaked out. The stock started selling off hard in the after hours. The evening before the secondary was announced, which just leaves a really bad taste in my mouth. And then we get a headline that Farhan, the CFO, has resigned. Now there's a lot of debate about, did TJ fire him or did he quit? Well, I have talked to both Farhan and I've talked to Raj. And my sense is maybe it's a little bit of both. Maybe TJ wasn't happy, and maybe Farhan decided that he needed to get while the getting was good, and maybe had a better opportunity. I don't know. But then we had a really important press release drop about them shipping samples of the EX2M, and about the fact that they were in receipt of orders for these qualification units, which I think is a very positive sign, which means that they're not saying to the customer, hey, take these, please qualify them. In fact, the customer is paying for them tells me the customer actually wants the qualification to be successful. So, if I go back up to that 10,000 foot level, what are the key waypoints with Enovix that are critical for this stock to break out and realize its full potential and get out of this, trading range of like, $6 to $15. And for me, one was the issue of, are they going to have enough capital? Well, I think they will, assuming that there aren't any 6 to 9 month or 12-month delays. I actually wish that they'd raised a little bit more, but they don't have a capital overhang. That's off the table at the moment. My next big concern was this EX2M, and is it going well? And are they, in fact, going to be shipping samples in Q4 like they had stated on previous earnings calls? Because that is the key to the business model. That is the key to the company achieving the unit economic model that they signaled 2 earnings calls ago, which indicates a line can do 150 million at 50% gross margin, and the line costs around, 60-70 million dollars. That's when this company really has the opportunity for each manufacturing line to be an ATM machine spitting out cash. So that was very positive, but they still aren't in high volume manufacturing. They've got to get the site acceptance completed for the high volume manufacturing line. We don't know how the quals are going. Obviously, it's a positive that the customer placed orders for qual units, right? Everything hinges on how the qualifications go, because that's the enabler to revenue. And, we still don't have a significant customer announcement. And, one of the things that I think is frustrating, and I had this conversation with management, is, but for the TJ special presentation, back in January of 2023, before Raj Talluri and Farhan even joined the company, TJ set a number of expectations that, in retrospect, it probably would have been better if he didn't, because he hamstrung that management with expectations on timing for the agility line, and expectations on timing for the high volume line, and expectations on timing for multiple follow-on lines, and expectations on revenue ramp. Well, they've missed all of those. And that was a very unfair thing to do, in my opinion, to management. But if you can get over that, if you look at what they've accomplished, it really is Herculean. And they really have not been getting credit for what they've accomplished. It certainly isn't reflected in the share price. And I said, but for that and the series of unforced communications errors, the stock would probably be a $20 stock instead of, hanging on by its fingernails, trying to get back to 10. Which kind of brings me to how do you think about this thing going forward? And again, I can't tell people how to think about it. All I can do is just share how I'm thinking about it, for whatever that's worth. Is, they still have to check off and continue to hit all of those waypoints that I just covered. They've got to put distance behind themselves and Farhan's resignation. The best way to do that is to bring in a superstar that has a superset of skills that Farhan didn't, and then people go, oh, this was an upgrade, I get it. And they need to continue to pound the table as they hit execution waypoints, so that people can feel comfortable that, hey, these guys are tracking to scaling this business in 2026. But one of the things I talked to management about is they posited the question, like, what's it going to take to really get the share price going? I said, well, if you go back to the TJ special presentation, it was everybody wants the EX1, everybody wants the EX1, and we don't have enough capacity, which is why we brought in the new team to build out our manufacturing infrastructure to fill this insatiable demand. And we've got 80 OEMs that are qualifying the EX1, and we've got 1.5 billion in future revenue visibility. And I said, the problem is, people didn't want the EX1. In fact, they want the EX2M. So you're out of position on product. And the 80 OEMs, it now is just a handful of smartphone customers that have the ability to drive huge volumes, but we don't really have any visibility as to what that ramp looks like. So, we went from a one variable story back in the TJ Rogers special presentation timeframe, that all they needed to do was be able to supply product at scale with high yields, and this thing is a rocket ship. Well, fast forward, and where are we today? Well, got the agility line up and running. We got to get the high volume line up and running. Nobody wanted the EX1, so we're going with the EX1M. we've got, two customers in the midst of qualification, but we don't really have the ability to articulate what our revenue ramp is going to look like. So, stories change quite a bit, and I like Farhan a lot, and again, it's just my own bias. I liked him a lot because he was very engaged operationally, and he has a technology background, and he understands the business and the technology, and I like that beyond just a CFO who's a great bean counter and he can recite various financial axioms and rules. But I think there's an opportunity to upgrade, and I like Raj a lot, and I like the management team, and I think that but for being held to the TJ Rogers special presentation, they've done an amazing job, but they still have a lot of work left to do.
Yeah, with speaking about Farhan, he landed on his feet, so there's not a question about qualification or expertise. I guess I take a much more cautious view. So I look at ENVX and say, okay, you've told me how good the future is going to be. Let me see how you've treated me thus far. Okay, so thus far, your chairman of the board came out and said you're going to do $1 billion. What, exit 2026? Well, I don't know the exact number, but significantly more numbers are not going to hit. Now, through that process, a year ago, I was talking about how Raj and I are, they're word salad. And what I mean by word salad is when you say things like, well, we just executed an MOU, that's exciting. Well, okay, that's an MOU, it's a design, joint design contract. But what is the potential? You don't have to tell us it's not in order. What's the potential? There's a lot still left for the investment and trading community to sort of put pieces together. Does adding 1 + 1 = 2? Well, so far with ENVX, it hasn't. Meaning what they've said they would do on the time frame and the things that they can control has not occurred. So risk in my mind goes up. Then the second part of the risk goes up with what you very much keyed on was some things are so beyond their control. And one thing I've heard from ENVX, and this might be an artifact of TJ Rogers being too involved, but the one thing in terms of value or stock price with ENVX is, at what point will the investment and trading community start believing them again? It's a trust thing as far as I'm concerned. So I want to believe, but at the same time, I'm looking at their recent history as well as my base knowledge about operations and manufacturing, and to assume there's not going to be any delays and things are going to run smoothly. And see, I think they're going to need to do another raise by the end of third quarter or fourth quarter of 2025, because I don't think everything's going to go smoothly. And I would much rather wait until I'm fine paying higher for the stock. If that means I'd rather pay 18 or 20, if that means they have a customer in hand, a large order, because then they have truly validated their entire business model. Until that happens, to me, Greg, it's the same story as it was a year ago, just with a couple more cherries on top, potential. So and I'm more conservative, but yeah, I like, and I do want to say this. I think Raj stepped into just a shitty situation. Yeah, I guess TJ Rogers, and he's obviously been extremely successful, but I guess TJ Rogers is going to be the new IR for ENVX, and I don't think that's a great idea either. So I'll be curious to see who they get as a CFO, because I felt as though after Farhan left very professionally, and TJ came out and intimated, well, sometimes management would be afraid. I don't like any of that. Having been around hundreds of companies and CEOs, I don't like that. So we'll have to see. But for me, it's just a sort of a wait and see. I don't see any rush to run in ENVX. And listeners, yeah, they could come out and announce a deal tomorrow with Samsung, and I could miss it. So what? I'll buy the stock when it's 18 or 19, because at that point, my outlook would probably be a double, $100. Who knows? But at this point, for me, Greg, it still is a high risk stock when I compare it to even an EOSE.
Well, No, I think that's a solid take. I mean, I want to comment on the TJ Rogers
Mhm.
comments in the press release and handling IR. I think that, like, somebody responded to a tweet saying, if you have an axe to grind with TJ Rogers, why don't you just sell the stock? I don't have an axe to grind with TJ Rogers at all. I think TJ is a great guy. He's eccentric. They only made one of him. He's got a style that's uniquely TJ's. But when you say bad things about your CFO in a press release, um, it's not a good look. I mean, what he could have done is he could have said, we want to thank Farhan for his contribution, and we wish him well, and our new CFO, here are the attributes that we're going to be looking
Right.
for, and people will go, oh wow, so they want to upgrade. And if I'm a new CFO that is considering taking a position at Innovix, it's just not a bad look. It's just a bad look to have the chairman of the board, who owns 20% of the stock, saying negative things about the guy whose position I'm going to be taking. And that was my only point. I do think I agree with everything that you said, implicitly and explicitly, about the risk reward with Innovix. And there is one other issue that I think people need to keep on their event horizon, which is that, just like I mentioned, I said in so many words that I think analyst estimates for EOS are low and are going to have to come up. I think that in the case of Innovix, there's a high likelihood that 2026 estimates are high and are going to need to come down. People are sitting out there in 2026 with revenue from 200 to $300 million in 2026, but the company said that they can only do 100 million in one line. So, if they're going to have a shot at even getting to 200 million in revenue in 2026, we need to be hearing that they're standing up that second line, or at least placing long lead time orders for critical equipment, soon, or those numbers are going to have to come down.
Well, but see,
So,
there's my point, Craig. Forgive me for interrupting. Look, their history has been delays. It's not a function of, in my part, I think investors, like you comment, they get pissed off. Well, you have an axe to grind. There's no axe to grind. We're talking about risks. They are objectively looking at the company. There are risks. And one of the risks is, unfortunately, in my opinion, okay, is TJ Rogers, a board that's a bunch of yes people. And now TJ's just jumping in the fire. And I guess, I don't know, he's going to be the co-CFO, IR CEO. Not a good look. But, I look and say, again, they've had a history of stumbling. And I need to see a couple times where they don't stumble, when they release good news and don't stumble. And I don't, everyone else has their own risk metric, and there's this passion behind ENVX. And I think part of it has to do with they've been in it so long. Look, I didn't find ENVX. I was lucky to find it January of 2023. And I think that's when TJ started buying like 1 million shares a day or something. So it was a beautiful trade. If you look back, though, how long have some of the shareholders owned it, Greg? An additional 3, 4, 5 years. So
100%. And
yeah,
and when you're I hope that I don't offend anybody with this comment, but when you have investor blue balls because you think that the thing is about to be a rocket ship, and then you get
mm,
kicked in the nuts with one of these unplanned, unforced errors, it gets exhausting. Like, you get
yes,
investor fatigue.
yes,
And some of the people that are derogatory and making ad hominem attacks, I suspect that they don't have the ability to think critically, and they may in fact have taken a much bigger position than they otherwise should have, and are underwater and in pain. And I'm not trying to be a bull or a bear. I'm just trying to share my insight. It's my insight. You can agree with it, you can disagree with it, you can completely ignore it. You can say that guy's an asshole, or you can say, gee, I hadn't thought about it that way. Um, but I'm not trying to do anything other than just share a view so that
right,
people can have the benefit of additional thinking. Because, I I'm just a critical thinker. I've got a a business degree from a liberal arts college, and I hated it at the time. But we had to read all the great books, and we had to spend 2 hours, 3 days a week, kind of debating, Socrates and the other great works. What did I think about it? Why am I taking this position? Having a constructive, dialogue, addressing views that other people may have, and trying to get to some kind of a consensus or ground truth. I'm just trying to look at the whole picture in all of its technicolor in a three-dimensional sense, and try to use my experience, which is pretty extensive, running high growth technology companies successfully, to try to make sense of it all. And that's all I'm trying to do here.
Well, and I think that you hit the nail on the head. When somebody starts getting upset because you have an opinion, that's a sure tell that A, their position size too large, or B, they are so far underwater they can't even see the sun anymore. It is so dark. And I had a comment. And I'll get a lot of them. Somebody DM me. I made the comment about NVX, and somebody DM me and said, "Well, you're a moron." And I wrote back. I said, "You're right, but not because of NVX, though. I mean, there are things that I'm dumb about, but not the NVX. So all I'm doing is what you just did, Greg. Is you're just stating facts. I mean, these are just facts. These things happened. Now, somebody can say, well, it's, how you perceive those facts. Okay, you're right. It is how you perceive those facts. But there's a difference between the news flow coming out of ENVX and EOSE. There's stark differences between the two and how they've managed the last 12 months. And let's go back before EOSE got the Cerebus deal, we were talking about, hey, EOSE, high risk stock, I think one of us, perhaps me, talking about, going concern issues. Greg and I come on here and we talk about our opinions, but we are not marrying any company. We date them, we trade them. Even Greg, he's longer term investor, but he's with NVX. I know you've taken your lumps. If you're sitting there getting upset, step back and focus on the facts, and then you can come up with your own opinion. But just because somebody's talking about their opinion, which if I had somebody talking to me who was a successful CEO, who had a tremendous amount of experience in the capital markets, I would be very careful if your initial reaction is, that guy's an ass. Maybe perhaps you're not thinking clearly. So, which leads me, so we got the good and the bad. And for NVX, I still own leaps, call leaps. And my hope is I don't want anybody to lose money. And that's this latest trouble with the stock. I sit here and I feel very badly. But then I'm always reminded, no matter how you feel, it can get more extreme. I really feel badly for BYON shareholders. Now, I want to start this segment by sharing this with listeners. So I have a Discord, right? And you don't have to pay for it. You come there, and it's a great community. It's effectively what Wall Street Bets was before there were any degenerates. So I guess on day one, when the Wall Street Bets opened. I'd like to share, before we get into the details of BYON, with my free Discord, I've had 4 or 5 people, I can't remember, that messaged me, Greg, and this is a great segue into this, especially coming off at NVX and the grief that you have received, 10 times more than I have, about opinions. You have personally, because of your opinion on BYON, risk. All you did was talk about the risks. They're elevated risks. This could happen. I have 4 or 5 people that each decided that the risk was too great, and in doing so, they sold before the drop and have each of them protected an additional well over 5 figures of capital, Greg. So in terms of listening or being able to form your own opinion or their own opinions after, these people are doing it right. Okay. They were long-term holders, but they listened and said, that's a different point of view. Let me consider it. And because of that, Greg, you literally save people well over 5 figures, each of them. It's absolutely incredible. And that's why whenever I see somebody attacking, I'm like, okay, that's an idiot. Because really, last time I checked, Greg, I don't think you're getting paid for your knowledge and your opinions. And they have been generally mostly right. because nobody's perfect. So speaking about that, let's go good, the bad, and the ugly. The ugly, BYON. Now, would you agree with that? That right now it's a little bit ugly.
Well, I think that ugly is a very polite choice of words. I, I mean, look, I am a BYON bag holder. I admit it.
Okay.
I built a huge position in the $20 range. I drank the Kool-Aid about the $3 billion lines of business, and we're going to be generating $2 billion in 2024, and we're going to do $3 billion in 2025, and we're going to do cross-selling, and we're going to have influencers, and we're going to do all these things. And it became evident after the stock hit a high of 37 and it started to fall like a brick on April 1st that they probably missed the quarter. But never in my wildest dreams did I imagine that we were going to see a scenario where Marcus Lemonis, who brands himself the fixer, was not only going to completely abandon that, but give investor, like, it pretended like it never happened. Like, just, it wasn't like, oh, I was a little too optimistic. I didn't anticipate, the startup issues with turning the BYON website again. And instead of doing 2 billion in 2024 and, 3 billion in 2025, going to do 1.7 billion in 2024. We're going to, it's like no hope.
Mm-hmm.
And then I got out. I got out in the 15 range because I said, I mean, this is probably the worst guidance I've ever seen in the history of Wall Street. And then, that resulted in a lot of personal attacks. Somebody started attacking my wife that used to be a friend, and just like really ugly. And that's probably the ultimate example of attacking to somebody who has a difference of opinion on a shareholder or on a share price. Well, then the thing that really got me concerned that this thing was in free fall is on, I believe it was October 28th. There's a Bloomberg second measures service where they will basically put out a press release and talk about the work that they've done in terms of tracking internet engagement. And they put out a press release on the 28th that said BYON sales fell 29% year over year. And that told me that this company was going to miss big. And they did. And then what did the company do? And I use the term strategy du jour. So what does du jour mean? It means of the day. So then we don't hear about the influencers, and we don't hear about, the $3 billion businesses doing affinity selling and cross-selling. We hear about what I would call a worst in breed partnership strategy, where we're going to loan money to the Container Store, and for that, we're going to get warrants, and we're going to get a presence, and we're going to get this and that and the other. And then a few weeks later, we hear that the Container Store is going to be delisted, and then we're hearing, oh, well, we didn't give them any money. Well, yeah, you can say maybe you dodged a bullet, or you can say, like, what were you thinking? Or even better yet, like, did you not do any due diligence on the Container Store and their prospects, just like you clearly didn't do any due diligence on the company, and you came up with the worst guidance in the history of Wall Street. Like, I've never seen a worst in breed partnership strategy result in success. It's kind of like, the two low IQ people probably don't have a high likelihood of producing the next genius. It's like the worst thing I've ever seen. And then it fell apart. And then, of course, on Friday after the close, we hear that, for the first time under Lemonis's leadership, that they actually did follow through on something that they said they were going to do, which is the closing of the sale of the corporate headquarters, which, by the way, yeah, there were some cash benefits, but I moved corporate headquarters, and it's very disruptive. And it really shuts the business down, and it's a distraction as you're moving everything. So, I don't know. I mean, I just look at this and say, what do we have here? We have a company with, call it approximately 300 million in cash, trading at a $238 million market cap. Like, why is it trading at a discount to cash? Well, it's trading at a discount to cash because I think the share price reflects the assumption that this is a company that's going to continue to burn cash and they're not going to be growing revenue. And, it kind of becomes a virtuous cycle of a value trap. And I'm not saying that he can't turn it around. He may. There are no indications to that effect up to this point, and he's been in the chair for, 6, 7 months. But if you really look at it, I mean, Camping World was a great success, but it's a roll up of mom and pop RV dealers that you now put under the Camping World brand. That's a very different business. It requires a very different skill set than an internet-based consumer-facing business. And I think it's pretty clear that they've been struggling with the strategy du jour. And so I don't know. I mean, I'm only saying this because there may be people that say, oh, at $5 it's cheap, and gosh, it could go to 10. Well, it could be cheap if they start growing revenue and stop burning cash. If they're not growing revenue and they continue to burn cash, it could be expensive. So for all the people that are angry and attack me and personal attacks and attacks directed at my family, that's on you, because you just don't have the ability to think critically, or you have a position that's way too big, or maybe you're trying to run some kind of a pumping cult. I don't
Right.
know. But this is the last time I'm going to talk publicly about Beyond, and I wish I'd never heard the name. I'm sure that there are many that share that sentiment. I feel, I guess, in retrospect, lucky that I was smart enough to get out in the mid-teens, because here we are. Stock's down 80+% from the $37 high, and it's down 50% if you measure it from the time that it was announced that Lemonis was going to be executive chairman. So you just look at this business and you say, well, let's assume that everything was perfect, and then you try to apply that success filter, which I would like to do now. And what you end up with is, okay, is it a big TAM? Yeah, it's a massive TAM. Is there an entrenched dominant competitor? Yes. The name of that company is called Amazon. And right? And Amazon has ingrained themselves in the buying psyche of virtually every American. Okay, so what's Beyond's unique value proposition that changes the physics? Well, they have none. And do they have a glow-in-the-dark management team? Well, clearly not. And do they have enough capital? Well, it's not so clear. And then if you measure a company based on the CEO's ability to deliver on their stated deliverables or waypoints, you get an F for that. So I just hope people don't lose more money. And there's so many other great opportunities, and it's just a real tragedy for everybody involved, in my opinion.
Well, it's I apologize for any hate messages you'll get for what I'm about to say, because I think you actually get some of mine. So thank you for taking that grief too. My only wish as a trader is I wish Beyond was trading higher, because I would have more profit to short it. Because looking at their most recent corporate activity, which you've just gone over, looking at the share price trend, which is easy to see, I actually believe that I'll be astounded if the stock's trading at $2, at least two, like the high. By this time next year, I think the stock will be trading as low as $2, because even with Trump coming in and he's going to stimulate the economy, consumer credit, I just saw a number that auto loan delinquencies have hit their highest level in 18 years. And that goes along with credit card debt and all of that. So he's in a consumer intensive I mean, that's his business. As you said, he's going up against, perhaps the greatest in our adult lifetime, Amazon. And so not only is he in the sale of the building, I look at that and I think, why would I celebrate that? Why would I celebrate you sold your headquarters? Why? It's sort of like somebody getting in, financial difficulty and they just start selling everything off. So unfortunately with Beyond, I think if you're still holding it, I think you got to ask yourself why. I mean, what are the prospects realistically? And if you're not able to answer that, I think it's a good idea maybe to, whether it's uh, Greg's, matrix of what he looks for, or somebody that has a history of success or running other companies, and maybe listen to that opinion. If you're not able to do that, then that's a pretty good tell that you have a problem. You probably have too much. You're probably down too much, but you can always go down to zero. When people say, "Well, it's cheap. It's $5," and it'll probably get cheaper. So I just I feel very badly for Beyond shareholders. I feel at the end of the day, when I was an advisor, I always told clients that referred to me, I'd say, give me a year, and if after a year we decide to go our separate ways, here's my deal. I would rather you go away from me because I didn't make you money, but I don't want you to leave me because I lost money. And I sort of look at companies like that over the longer term, right? It's shareholders put their money in your company. They need a return. They don't need a return waiting 8 years and after your stock goes down 95%. They need to see consistent progress, which reflects in the share price over a every 6 month basis. And the only company right now, NVX is sort of on the right at that edge. Which way are they going to fall? EOSE clearly, and Beyond. Boy, they're going to think about all the investor damage that's been done with the institutional community and the communication. I think people bought Beyond because it was a vanity buy. I think Marcus Lemonis, I don't know him personally. He's obviously been very successful, but it appears to me he thought he could just work his magic on this deal too. I don't know, but it certainly looks to me like it was one of those quick and dirty due diligences. Let's put this deal together. We're going to build it off of some of the buzzwords, NFTs, and social media and influencers. So it was very, to me, like put together. Maybe not certainly not the level of due diligence that Cerebras did on EOSE. There's no way they did that level. So, but did you have any final comments before we wrap up our last podcast for the year? Actually, did you have anything you want to leave our listeners with?
Yeah, I just one last thought that occurred to me listening to what you were just saying on Beyond, and then I'll answer the wrap up question. So, thing about Beyond is if the investment thesis is don't bet against Marcus Lemonis and the guy doesn't make money until the stock is north of 40, if that's your investment thesis, you're setting yourself up to basically take a baseball bat to the head. And that's what I think happened to a lot of people, and it happened to me. And I think at the end of the day, you need to be careful about being intellectually lazy and just saying, hey, man, this stock's $5. It could go to 10. And I think we did a pretty good job explaining why, it could go lower. But even if everything went perfectly, it's just not a good business at the end of the day. So in terms of just thoughts going into next year, I really enjoy these podcasts because I bring a particular tool set to the table, and you bring a unique and different tool set to the table. And I think we're able to, inspect these companies in their technicolor and, not only go, a mile wide, but a mile deep in terms of how we're thinking about them. And I hope that these are helpful to people. And like you said, they're not investment advice for anybody to take a particular action one way or another, but it's a way for people to inform their thinking and maybe give them a different way of looking at things, or maybe giving them some insights that they didn't glean just from a headline. And so I hope everybody is going into the new year with great expectations for 2025. I think our country has a lot to be excited about. Whether you like President Trump or hate President Trump in terms of his personality, I think that his policies are going to be great for this country, and more importantly, for those of us who are investors, they are going to be great from an investment standpoint. And I think that your comment about putting up the success filter, and if anybody has ideas, I'd love to start talking about some other names. I think we just punted beyond. We're not going to talk about that anymore. But I spend hundreds of hours, like hundreds and hundreds and hundreds of hours researching these companies, and I'm eager to see if anybody can come forward with other names that meet the success filter, and we can expand our wheelhouse a little bit in 2026. So
If
thank
you'll
you
allow me,
for.
if you'll allow me to interrupt, I want to share with listeners. So, as is unfortunately apropos with me, I had technical difficulties. So, Greg was kind enough to have to re-record with me as I had a problem with the service. And when we did the first podcast, which was yesterday, first recording, he had already been up for, I think, 5.5 hours that morning, in addition to working on the day before. Here we are doing it again, but I want to share this with you. So I had a Discord member came and said, "Hey, I like this pharmaceutical company. It's got a long history. It's okay. Take a look at it. Send some stuff over to Greg." Here's what Greg and I are doing behind the scenes when people bring companies to look at, and we look at them through our own lenses and make the decision whether we want to move forward. We actually met with the CEO of this pharmaceutical company last week. We had a virtual meeting. It was over an hour long. It was a fantastic meeting. We walked away understanding the vision of the company, being incredibly impressed with the CEO. And I'm not going to mention the name of the company yet because we're not done with our analysis. But that's the type of work that Greg, who is a retired CEO, okay, is taking out of his time. And we're actually meeting with CEOs of companies. And management. So if you're out there, when Greg offers this, my gosh, what are you doing? Take advantage, right? If you've got an idea, send it in. If it makes it through those filters and gets to the point where it enters, it's past Greg's, matrix, maybe we do try to go meet with the management. And, I just want our listeners to understand that really Greg and I coming together was entirely serendipitous. I mean, we had never talked before. We never even communicated on Twitter before. We just, and the way that this has evolved, I think, Greg, I'm super excited for 2025 for more being able to provide people with more information so they can make their own informed investment decisions and teaching them how to do that. So I want to thank you, sir, and I'll let you close this out. If I ask you to close this out, but I want to thank you for, look, I'm from Philly, teaming up with a nobody, coming on, establishing credibility for me. Thank you very much, and sharing some incredibly worthwhile and valuable opinions. I'm super excited for 2025. I hope you and your family have a wonderful Merry Christmas, and all listeners, wonderful Merry Christmas. And I'm super excited for the new year. So with that, Mr. Reyes, would you final comments and close us out, sir?
So I echo each and every one of your sentiments, and I hope that everybody is able to use this holiday period to get recharged and excited about the new year with a clear head. I hope that everybody has a wonderful holiday season, Merry Christmas, Happy Hanukkah, and hope that we're able to hit the investment payment running hard, and it's I think it's going to be even more exciting next year than it has in the last 4 years combined.
Thank you so much. And one final reminder, podcast at MrNotAdvice.com. All you have to do is put in the subject line Greg or Mr. Reyes and then the symbol, and we'll know that this is something that we need to take a look at. So thanks so much, Greg. Hey, I can't believe it's Christmas already, by the way. I also can't believe, in terms of the importance of what we do, we're 25 minutes into the Philadelphia Eagles game. So that's something I rarely miss. So that's where you rate in my life, Greg. So
that speaks volumes.
It does,
that
right?
Speaks volumes.
So, brother, have a Merry Christmas. Give your family hugs, and I'm super excited for the new year, bud.
Back at you. Take care. Merry Christmas.
Thank you.
got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying I'm different. Ain't hanging on to the